A bank account is the first stepping stone in an individual's financial journey. Banks open the doors to the concept of money, spending, saving, and of course, borrowing for lakhs of their customers. Now, in many cases, banks eventually end up becoming the gateway to the idea of investing and wealth management as well for a lot of investors out there, especially younger investors, newer investors. So the question is, have we women mastered the art and the science of smart banking? Hello and welcome to Financial Quotient, our special series on women and money. I'm your host, Surabhi Upadhyay. Today, we will get some of the country's most well-known banking veterans to guide us on how women can take charge of their finances and get smart with their banking habits as well. Let me introduce our panel today. Joining me on the show is Ms. Arundhati Bhattacharya, Chairperson and CEO of Salesforce India at present, and of course, former Chairperson of the State Bank of India. We also have with us Mr. Keki Mistry, former CEO of HDFC, who is now a director on many company boards, including blue chip names like TCS as well as HDFC Bank. My third guest on the show today is Rajiv Anand, Deputy Managing Director at Axis Bank, and he's been someone who's seen retail banking behavior for many decades now. Ladies and gentlemen, it's a pleasure to have you on the show. Thank you so much for joining us today. I want to start with getting the panel's thought on the subject itself. Have women become a little savvier with their money? Are they willing to take more charge? As participants in the country's financial landscape, let's get your thoughts in on this first. Ms. Bhattacharya, if you could open the floor.
First of all, thank you very much, Surabhi, for having me on this show. This is a matter very close to my heart, as I am sure it is with most bankers, because they really want to see women, participating more and more in the area of banking, investing, insurance, all of these. In fact, one of the AMFI reports that I was looking at, it says that women in the age group of 18 to 24, the people investing in this age group has quadrupled in the period 2019 to 2022. So they are showing a growth rate, an annualized growth rate of 63%, which is excellent news. But having said that, there are also reports that say that 33% of women have never ever invested in their life. And 22% of women don't even know that there are investments in their name, meaning that they have just been putting their signatures wherever family members have been telling them to. Now, all of this is really very disturbing. I would say that we have evolved. We are seeing more women coming forward today, but that we still have a very long way to go. One of the things I remember, when I was back in the bank, that we had done is we had given a 5 basis point advantage in the home loans, which we had named as Har Ghar. Har, if you put it in English, is, HER, that means a woman's. And if you put it in Hindi, it is Har means every one of them. So Har Ghar was the scheme that we launched for this. And the idea was that if a woman came forward and became a borrower, or even if she was the first borrower, she would get a 5 basis points advantage in the interest rate. And believe me, it worked quite well. After about 2 years, we found that 1/3 of our portfolio had women as co-borrowers and first borrowers or individual borrowers. So I do think there are ways and means of getting to, encourage women to come forward and take these things, take these loans, actually get into the banking habit and thereafter into the investment habit. But having said that, I think we still have a long way to go. And I don't still see the kind of participation of women that I would like to see.
Fair enough. I think those are some wonderful opening thoughts, a lot for us to sort of dwell on and debate and discuss. Before I move to Mr. Mistry, I just want to present some data points because I was trying to figure out what is the latest available number in terms of just how many women own bank accounts in India. This is data from the Ministry of Statistics and Program Implementation, MOSPI, and I just want to pull up the numbers. So this is as of end 2022. Women own 35% of the individual bank accounts in India, actually total bank accounts in India. That number, the total number, 225 crores. Within that, women is just about 79.4 crores. So the percentage is about 35% in terms of bank accounts. However, when you take a look at the aggregate deposits of the banking sector, then the ownership for women is 20%, just about 1/5 of the total deposits. 1/5 are owned by women. Just some stats to give us an idea of how deep penetration is when it comes to women in the banking sector. Mr. Mistry, if I could get your thoughts in on this as well. And I think Ms. Bhattacharya raised a very important point. I think the housing sector and home loans, where there is a preferential rate for women, I think that as a product has been a big stimulant. Would you agree?
See, first of all, before we come to housing, I don't entirely agree that women don't have a role in finance. I think women play an important role in finance, most women. If you look at just the household budget, who manages the household budget? It's the woman in the house. A woman learns how to save money out of the household budget, use that money for things which are important for the family. Most women are now working, and therefore they have their own finances to manage. If you look at just some numbers, you talked about 35% of the bank deposits being of women and 20% of the amount being of women. But if you look at, for example, the Jan Dhan accounts, in 9 years, the Jan Dhan scheme has been probably one of the most successful financial reforms that we've seen anywhere. 56% of the accounts are of women, 56%. And that is about, if I recall right, about 28 odd crores out of 50 odd crores. And 2/3 are in rural areas. If you look at the share of women in government schemes, then 70% of the micro loans or the mudra loans are for women. And 42% of affordable insurance is for women. Now, if you look at loans, many banks believe that the credit history or the credit record of a woman generally tends to be better than of men, if you look at credit scores. So many banks have customized products specifically targeted at women, whether it is special credit cards for women, whether, as Arundhati said, there's a special pricing on loans that are offered to women, whether it is higher amount of financing that a woman would get compared to what a man would get, or specific products directed at women, whether it is for medical schemes, higher education, weddings, travel, etc., etc. Also, there are flexible repayment schemes specifically targeted at women. So I don't think it is right to say that women don't have a role to play. I think women have a very important role to play. I don't think it is only a gender issue. I think it's more a question of educating people, whether it's a man or a woman, on personal finance.
Absolutely, and we keep trying to sort of push ourselves because that's a subject area personally very close to my heart. And of course, we do a lot of coverage around exactly this right here on CNBC TV18. Rajiv, let me come to you as well. I mean, a lot of the products that Mr. Mistry was highlighting, you've been in the system for so long. What are the trends that you have observed? Have women become more accustomed to at least trying out some of these new products, not just the home loan bit, but a lot of the others?
I think, firstly, from an opening statement perspective, I'd like to sit in between really what Arundhati said and Keki said. I think I completely agree with what Keki said, that ultimately it is the woman of the house who manages the budget of the house, does save that, but typically in cash, etc. But I think it is really, the issue is getting women to participate in the more formal sectors of the financial services industry. So therefore, if you look at in the mutual fund industry, yes, the numbers are growing, 50%. Yes, the numbers are growing across, in terms of, if you look at various demographies, if you look at it in terms of even geography, the number of women participation is growing and growing quite strongly. But the absolute number still is in the vicinity of 75 odd lakhs. And so therefore that number, clearly needs to go up, significantly more. If you look at it on the loan side and if you look at our microfinance books, the joint lending, the joint liability businesses, it is all women. We have something like, 3 odd million women who we lend to through the JLG programs. And I've gone and met some of these women who are really running small businesses, who want 25, 50, 75,000 rupees to be able to increase the size of the kitchen business that they're doing, or the tiffin business that they're doing, or is a tailor and wants to buy more cloth or whatever it is. It is clearly the women entrepreneur is growing. We also participate in digital women awards. Okay. And in those award ceremonies, we are able to see the amount of entrepreneurship that is growing in the female population. And I think it is incumbent upon all of us to encourage that as we go forward in whatever manner possible.
Okay, fair point. And I'm glad you brought that up. That sounds very promising that, at the level of women who are perhaps banking in the capacity of an entrepreneur or a self-employed person, the sort of the connects with the banking world are improving and increasing. So that's good to hear. But I just want to draw the panel's attention to a wider issue on complexity. And this is flowing in from the conversation we had on the show last week. That increasingly the financial world, whether it's banking, savings, or of course newer products on investing and insurance, increasingly the complexity is also rising. So what do you think, Arundhati, is that becoming a bit of a prohibitive sort of development? And if yes, and how do we solve for that? How do we keep things simple so women can really get, roll their sleeves up and get deep in with finance and banking?
I'll answer that, Surabhi, but before that, I would like to comment on what my earlier panel speakers have talked about.
Sure.
Well, it's great to look at the microfinance sector where there is no collateral requirement. It is a fact that where self-help groups are concerned or JLG, joint liability groups are concerned, women there are definitely more because they are actually more in number as well. Plus, there is no collateral requirement. The moment it comes to a loan that requires a collateral, believe me, if you look at the numbers of women, it's pathetic because most of the women are not able to bring the kind of collateral that banks seek. Neither are they able to get the permission of the people in their families who they feel they need to consult. They cannot go ahead and put that collateral up on their own, even if it is owned by them, So, if you look at all of that, then you will see that, definitely there is a space for women to grow in, and they need to grow there without any doubt about it at all. So that if you're looking at manufacturing loans, if you're looking at bigger ticket loans, that's the space where women still have not really been able to make very big inroads. And we need to help them do it. And therein lies the complexity, as you call it, because these are the places where, applying means you need to have a profit and loss, you need to have a balance sheet, you need to have done all the formalities. So, to that extent, it becomes more difficult for women at that point of time to provide the kind of paperwork and the kind of diligence that they need to show in order to qualify for these loans. Not only that, if you look at the products themselves, they are also becoming more and more difficult, more and more, it's not so easy to understand. And there again, there are many ways in which we can simplify this. For instance, when I go to these schools and colleges, one of the things that I tell children, regardless across the genders, I tell them the first thing that you should do as soon as you start earning is to open a PPF account, a public provident fund account. It's by far the safest. It gives you good returns. It's very simple to understand. Go ahead and do that. That should be your first investment. Okay. The next thing that you should look at is getting some insurance, especially for your medical needs. Okay. That's the second thing that you need to do. And thereafter, slowly you begin, because you are not an expert in the equity fund area, in the markets. So go and start investing small bits in the mutual fund. And the simple way of looking at mutual funds is look at the long-term performance, because these are all going to be long-term investments for you. Look at the long-term performance and go in for a balanced fund. Okay. If you are very young, you can take a more riskier fund because you have the time by which to make up for these things.
Sure.
But then you need to make it very simple for them to understand. But to do that, I think, they get going. So to that extent, I think, it's not that, financial products are very difficult to understand. It's the way they are put forward.
Absolutely.
There is a return.
Yeah.
You have to understand that if the returns are much higher, the risk is also going to be much higher.
No, absolutely.
Very correlation, risk and returns. So aim for medium returns and then look at the risk, and you'll probably be there correctly.
So let me ask the gentleman to sort of talk on this as well. Rajiv, when you talk to your teams and the heads on the retail side, what is the evolution? What has changed? Are you still talking to the man as the main customer when it's about whether it's a loan or any other sort of product, or Have you seen that evolution where women are the actual customers, not just customers on paper, because that loan needs to be taken in their name or that product needs to be taken in their name?
Surabhi, we continue to grapple with this. We've had various permutations and combinations of trying to solve this, through products, and all banks, including ours, we've tried a women-specific product based on specific needs for women. And I've always wondered, do women really have very different financial needs as compared to men? And I think we've had products which are called pink, etc. And I think it's more symbolic than anything else. I do believe, and I think that's the point that Arundhati made as well. I think it is really a function of financial literacy to start with, and I do believe that we should start financial literacy at the level of the schools, so that as whether it is men or women, they have a better understanding. They know how to operate a bank account. Then it is really about how they're going to pick and choose products, and have a conversation with their trusted banker, to be able to help them with the products. One in terms of protection, one in terms of investment, one in terms of savings, which will start them off on this journey down of finance, what I would call financial freedom. And because ultimately that is what all of us are working towards, whether you're a man or a woman.
Yeah, no, absolutely take your point. I think financial literacy is really the center of it all. We were, in fact, just playing some graphics right now, which highlight this. So this is from a study that a web portal, Paisa Bazaar, did about just how many customers, out of over 3 crore customers, how many women come to check their credit scores. How many of them understand, the importance of maintaining a good profile. So those numbers are still low. It's, I think, 88% men, and just about in the mid-teens is where the women actually are. What we'll do is we'll take a break. We'll continue the conversation on the other side and talk about the steps that women can keep in mind when it comes to smart banking.